We have a massive problem. Sellers still think we're in the crazy property market of 2020 and 2021, and buyers are feeling the pain of higher interest rates and are either paralysed or making a decision, waiting for interest rates to go down, or hunting the biggest price reductions possible. The result? We're left with a property market flatlining, with house price growth losing more and more of its gains through last year, reaching the end of the year having not only lost all its gains, but in fact starting 2023 with prices up 10% to ending the year with average house prices at negative 1.1%, the only drop in house prices we've seen since April 2012. But not only that, but at the same time, we've seen inflation peak over 10%, dropping to the most recent 3.9% in November. But will house prices continue to flatline or crash or increase? Should you buy a property or investment now or wait? In this video, I follow the data using my experience of having spent the last 10 plus years of my life building a nationwide home buying company, estate agency, and my own personal property portfolio. To start, we need to zoom out and look at house prices in context. Yes, the news loves plastering the fact house prices have had their first drop since 2012. But what they leave out is house prices have actually increased 18% over the last 3 years. And when you compare that to the 3 years before, we only saw house prices increase 8%. So yes, we can accurately say house prices have dropped 1.1% over the last year. But it's also accurate to say house prices have increased 18% over the last 3 years, which is 2.2 times, over double the 8% growth we saw the 3 years prior. So I hope you see the point that in reality, property ownership has actually been a pretty fantastic investment for most. Even if house prices had dropped not the 1.1% we experienced, but actually dropped 9.7% over 2023, property prices would still have seen an 8% growth over the last 3 years, matching the 3-year period before. But look, all the data has showed us so far is that property has been a great investment over the last few years. Not that it's going to continue to be. We can clearly see prices have started to hit the negatives. So the question is, will house prices keep dropping? To figure out if house prices have hit the floor or will drop further, we need to assess two things that are putting pressure on everyone's finances. The first is we need to look at interest rates. Why? Because interest rates affect what people can afford to buy, and that includes property. So what we need to decide is if interest rates are going to go up and therefore create even more pressure on households around the country, or if they're going to stay steady or even drop and therefore reduce pressure on house prices. Looking at this graph that shows interest rates since 2001, it is clear to see the drop in interest rates that in reality started in 2007 to cope with the global financial crash and continued up until the pandemic, where they then dropped even further, has left a giant canyon shape on interest rates as they've now increased up and up over 2022 and 2023. But the reassuring thing is interest rates actually haven't increased since July last year, which is a great sign. And mortgage interest rates have actually fallen for 19 weeks in a row, which sends the message that at the moment banks and lenders aren't expecting interest rates to increase any further. If anything, they're expecting them to begin decreasing. Nonetheless, 3 years ago, a £100,000 25-year repayment mortgage at 2% would have cost you £424 per month. However, now the same mortgage at 6% will cost you £644 per month, 52% more. But the same mortgage at 6%, not only 25 years, but over 35 years, will cost £570 a month, an easier to tolerate 34% increase. So it's quite clear that high interest rates are hitting people's pockets, but households can do things like extend their mortgage terms from the lower 25-year term to longer 35-year terms, which has actually helped a lot of households handle the higher interest rates we've experienced. But this gain of extending the term of your loan does create a longer term pain, as you're then paying far more interest in total over the longer term. But in reality, how do we know how well the market has coped with these higher interest rates? Are households at breaking point yet? A sad measure of how difficult the market has got for homeowners is to look at repossession rates. What may surprise many is repossession rates are actually lower than they were pre-COVID. Yes, they've increased a bit, but they're looking relatively stable and still about 20% below pre-COVID norms. So actually, looking at interest rates and looking at repossession rates, it certainly looks like the worst of high interest rates is behind us, and that repossessions have potentially reached their peak. Now, of course, we need to factor that many households, although we've had higher interest rates for a couple of years now, a lot of households haven't actually seen their mortgage payments go up at all. A lot of people have had their interest rates fixed over that whole time at lower rates, and this graph shows the number of people each quarter that have basically come off their lower initial fixed rate mortgages and are then having to shop around for a new mortgage at a far higher rate over 2021 through to 2023. And what's expected into 2024. And you can see the peak of those having to renew on higher interest rates was really through that 2022 and 2023 period. So in reality, there are going to be fewer and fewer people through this year in this situation. And they'll be switching in a far better mortgage market than we've seen in the past, which so far has seen average interest rates on mortgages drop 19 weeks in a row now. Really, it seems the worst of interest rates is actually behind us, and a big enough portion of the market has already dealt with the burden of the higher interest rates that we've been seeing without house prices crashing. The main thing that could create disbalance is if interest rates all of a sudden started increasing again. And the only thing that could likely cause that is inflation. So the second key thing that is putting pressure on finances is inflation. Inflation is the rate at which the average cost of things increases every year, and the target for inflation is 2%. So in theory, if something cost £1 today, it should cost £1.02 in a year's time. Because inflation has got so high, increasing over 10%, as you can see on this graph, through 2022, 2023, that is what has caused the Bank of England to take action to increase interest rates. They know increasing interest rates reduces the amount of money we can all borrow, reducing the amount of money people can use to spend, which then reduces the demand for goods and services. As demand reduces, prices go down. It's a blunt tool to basically get the population to spend less. And as you can see, it's working. Inflation has dropped and is actually dropping faster than expected, which is why the market is expecting interest rates to not increase, if anything, potentially stay stable or decrease, which is why the mortgage market has been reducing its rates for the last 19 weeks. So in conclusion, to me, it seems clear the market should improve this year. My personal prediction for 2024 is I don't expect prices to increase dramatically, but I don't expect them to drop dramatically either. I'd expect prices to drop no more than 1% and most likely not increase beyond 3%. If you're thinking of buying, I think you should approach with caution. The majority of properties on the market right now are priced to reflect the market we had in 2021 and 2022, where at one stage we were seeing about 40% of properties on the market selling above the actual asking price. Now, only a few percent are selling above the asking price, with over 80% selling below the asking price. So the market is very much flipped from a seller's market to a buyer's market, and you should treat it as such. In reality, if you're a smart buyer, the market is working best for those that can be patient and pick up the best buys, and the market is working worse for those that can't wait to sell and need to sell now. If you don't need to sell, don't. If you can buy, I think 2024 is the time to do it before prices start rising to a new normal in 2025. See you in the next video.